All right, guys. Hello, everyone. I'm recording another short market review using the ACrypto trade platform. Accordingly, my previous review was recorded around April 22nd or 23rd, somewhere in that range. My short entry point was at 78,700, and accordingly, everyone had the opportunity to join me in a short position on the next anomaly and make a bit of profit. I closed my short with a little over 3% of net movement. The first take profit was at 76,400, and I closed the second part of the position around $76,000, earning about 4% on my deposit with my risk management. So what do we have now? We are seeing an exit from this local downward channel, and everything points to the fact that some kind of upward movement will continue a bit higher. I don't know if these highs will be updated or if there will be a strong update of the highs. I don't know that. I don't want to guess. I rely on metrics, and based on what I see, I'm almost certain that the price will definitely reach this point. But after that, we'll see. Again, we have this kind of local upward movement. During this local upward movement, we once again see that shorts are being accumulated. In other words, this isn't the kind of fuel that will trigger margin calls for us. Most likely, the big players are once again building up their large short positions. In this sideways range that we have, the asset is being redistributed. After all, we had an upward movement from 65 to $80,000. That's 15,000, which means more than 20% of pure movement without any proper correction. Well, you can simply take the Fibonacci levels, apply them here, and 0.618, 0.786 from the highs. Let's see. From the highs, guys, that comes out to 14, well, 13, 15%. So they could easily organize a corrective move of that size. For now, I'm waiting. I'm not opening any new trades because according to my system, there are no signals. There is a local initial signal, but most likely that's just a reaction to this resistance in the form of large limit orders. What can I say? Once again, we have another divergence on the indicator. So you see this one is going up while this one is starting to go down. This precisely indicates that short positions are being accumulated again. That's basically all I have to say about the chart. You can see for yourself there's this local upward movement. We've broken out of it, and now maybe we're seeing that very retest. Again, of course, they might push it higher or they might do a retest and then go lower. I don't want to guess. I've moved away from that a bit. I trade strong market anomalies, and I only enter when there are advantages for me and my deposit, when I can enter a trade and earn another 3 to 5% on my deposit. That's it. There's really nothing more to say. I probably just wanted to show this little moment. Again, it's a pattern from the past. Some people were watching, and I was watching too, a pattern from 2022. Here it is. We all thought that this downward movement was ahead. That is, we were in this sideways range, and a downward movement was expected. But most likely, both I and everyone else were wrong, and there's a chance that we're actually in this kind of sideways range. You see, right? Again, I specifically highlighted the patterns. A lot matches up starting from this low point. So you see, right? These lows match up, high, low, high, then another low, and then this upward movement started. Only here the formation is a little different. Here, let's say the sideways movement kept hitting the same point. Here, for the most part, it's an upward movement, but again, you see what kind of reversal pattern there was. Here, they were hitting some level directly. I don't want to look back in history, which they kept testing, and the last breakout happened right as the highs were updated. So there's a chance we'll see the same picture here. And accordingly, if these highs are broken and we get a push to somewhere around 80 or $81,000, that would be an excellent opportunity to try going short again. That's it. And the further movement here, it is downward, it should go lower than these previous lows. That is somewhere around here into the 62 to $63,000 range, then a sideways phase, another bounce, and then comes that very capitulation, accumulation, and trend reversal. And more or less, if I've mapped everything correctly onto the chart, the reversal should occur around September or October. As I've already mentioned, we are currently in the bearish stage of the cycle, and as a rule, all these bearish cycles have ended in October or November. In other words, in the last quarter of the year. That is, the last 3 months are October, November, and December. So accordingly, everything more or less falls within that period, and maybe that's our plan of action for the next 6 months. That's it. Again, I don't want to make guesses. I showed you this more for content's sake. I focus more on my own metrics. I see that the sellers are starting to take control. Yes, there are certain imbalances, but there still aren't those very statistical anomalies that would make every one of my trades profitable. So as I've already told my guys and recorded a separate review, I have an auxiliary indicator that also points to a short from the current levels around 77,300, give or take. And I'm telling you, I won't be entering because there's a risk of a squeeze, since we have this strong resistance at $80,000 above us, which used to be support but is now resistance. If it gets broken through, a cascade of margin calls could start. I don't know if that will happen or not. And again, I don't want to guess. I'm just warning you. So right now, there's a tilt toward the seller, but it's not that same abnormal tilt toward the seller that we can work with. Enter and be confident that the trade will close in profit. That's it. Well, basically, I've shown and explained a lot. I think there's enough information here to avoid getting into risky ventures. Most likely, you just need to wait for the price to go a little higher. I think the reversal will happen in the range of, again, $79,000 to $81,000. So somewhere around here, yes, 81. That is in this range, give or take. Some kind of reversal pattern will form. In other words, right now we don't have any major liquidations, you see, right? Since April 20th, there have been some liquidations, but they're not significant. So even here, 300 million is nothing compared to these 2 billion, or say these over here. These are also billions. So there is movement. Basically, it dropped by 5, then grew by 3, but there are no liquidations. So this liquidity is hidden somewhere. Most likely it's hidden behind these highs, and accordingly somewhere below $74,000. That is, if they enter this range, most likely some kind of cascade of margin calls will be triggered here, and accordingly you could try to enter. Basically, guys, that's it. I won't drag this out. Happy holidays to everyone. Have a great weekend. Talk to you soon. And don't take unnecessary risks. Don't lose your money for no reason. They're not easy to earn.